So what happened to retained earning at the end? You see, the retained earning is credited with revenue, debited with all the expenses, and also debited with dividend. And then we have the ending balance here. And this is the same ending. This should be the same ending balance that we wrote it down on balance sheet under owner's equity. If this is not tallied here, it means there is some problem. There is some error, right? So you see, I told you, we are closing the books, so we are closing the books here. Service account is now closed. Dividend account is now closed. Expense account is now closed. All charged to retained earnings. Right? Understand, everyone? Okay, now you have to prepare the closing entries. I think this is a perfect example for having breakout room. So I'm opening up the breakout room. So remember, which kind of entries we need to close? Revenue, expense, dividend. And if there is some other account, we don't need to close that one, right? So let's do the entry. Please take a picture. This is a group activity second, and I'm making 3 breakout rooms. Okay, so how many? Wow. So who left in our, so we have only one person here. Okay, I'm recreating the account. 3, here we go. Open all. Please accept. Meanwhile, I pause the recording here. I will be resuming the recording once we complete our breakout room activity. Okay, guys, welcome back. So here we go. So we need to close all the accounts here. First of all, let's identify which account belongs to, first of all, the closing entry, remember that one belongs to 3 types of account: revenue, expense, dividend, right? Okay, cost of goods sold. Is it a part of expense, revenue, or dividend?
Expense.
Well done. This is expense. I'm calling it expense, right? Good. Accumulated depreciation. Do we write it down on balance sheet or on income statement? So this is a part of balance sheet. No. This is not a part of income statement. This is accumulated depreciation, not depreciation.
Oh.
This is not a part of expense, neither dividend, neither revenue. Selling, general, and administrative expenses part of expense. Retained earnings. It's not a part of either of these one. Service revenue, part of revenue. Depreciation expense, this is the part of expense, because the accumulated depreciation is shown on balance sheet, right? Interest revenue, see, revenue. Dividends, part of dividend. Income tax expense, part of expense. Accounts payable, balance sheet item. We ignored that one first. So tell me, the balance that is showed here, 63,800, is it debit or credit?
Credit. The revenue is credit.
It is debited or credited? Okay. Everyone, please.
Debit. I received, sorry. I received the revenue, debit.
Revenue account balance, normal balance is debit or credit?
Debit.
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 So tell me, the nature of the account is owner's equity, assets, or liability?
Asset is on cash.
Revenue is our asset, Florian, right or not?
Revenue is on account receivable. No. We receive the money, debit.
Service revenue. All kind of revenue. Let me repeat one more time. Florian, you really need to watch, and all others, you really need to watch our lecture regarding this one. Assets is equal to liabilities plus owner's equity. Owner's equity consists of
It's
common
credit.
stock and retained earning, right? Retained earning also consider revenue and expense. Okay, Florian? So what we call that, if asset increase, we call this debit. If asset decrease, we call this credit. Liability increase, credit. Liability decrease, debit. Owner's equity increase, credit. Owner's equity decrease, debit. Same rule with the retained earning. Increase, credit decrease, debit. Common stock increase, credit, decrease, debit. Revenue increase, credit, revenue decrease, debit. Expense increase, debit, because an expense increase going to decrease the owner's equity. So nature is different. So you just remember that one. Whenever there is expense, expense increase mean debit, decrease mean credit. Now let's go back to our this question. So we know that revenue increase mean credit. So the nature of service revenue belongs to ultimately owner's equity. So its normal balance is, we call this increase means normal balance. So service revenue balance is credit. Expense balance is, so all these selling and general administrative expense, sorry, not, let me just, so service revenue, it is credit balance, cost of goods sold, debit balance. Why? Because this is expense. Selling general and admin expense is also debit because this is expense. Income tax payable is balance sheet item, so we are not taking that as expense. 1200 expense, we call it debit. Dividend increase, debit. Revenue, credit. And depreciation expense, debit. So let's first close down our revenue. So we know that revenue accounts are two, right? So we need to close down. So their normal balance is credit, right? So these are credit balance. So if we want to close this one, so we need to make a debit one. Closing means debit. So debit revenues, credit retained earning. Everyone understand that? Kathleen, Nimesh, Coco.
Yes, sir.
Closing means we are closing the books for the whole year. That's it. And then we start a new book, new T account for the next year. So we close down. Close down means we make a reverse entry. So their balance, nature of the balance is credit. So we make it debit. Against, every three accounts must be against retained earning, and the logic is, I already explained here, the logic is because these belongs to retained earning. Revenue belongs to retained earning, expense belongs to retained earning, right? And if you remember the formula for retained earning, retained earning formula is opening retained earning plus revenue minus expense minus dividend, right? So it means revenue should belongs to the account against should be retained earning, expense account against retained earning, dividend account against retained earning. So that is the logic behind that one. Okay, why don't we close with balance sheet or income statement or the other accounts? Because the nature of these revenue, expense and dividend, they belongs to retained earnings. So that's why we are using the retained earning as closing account. Understand everyone? How about the expense? The nature of the expense are debit. So if we want to close it, we make it credit. So all the expense we write it down on credit, but against the debit side would be retained earning. So retained earning, all the expense addition, cost of goods sold plus administrative, general and selling expense plus depreciation plus income tax expense. If you add all these, it would be 50,800. Now closing down the dividend, do we have dividend here? Only one account, which is here. So nature of the dividend is debit. So we make it credit. So dividend to retained, retain earning to dividend, because nature of dividend is